Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, it is Thursday here. And we've had a little bit of news this morning. Looks like U.S. Challenger layoffs 62,000 versus a previous reading of 47. We don't get an estimate for that one. And then we had the initial jobless claims, maybe just a tad lighter than expected, 218 versus the expected 223. We also got some PCE numbers. Let's see here. PCE price index month over month, spot 3. Core price index, spot 3. All in line with the numbers. So because of the Challenger numbers, it looks like we had a little bit of a move up, but pretty constrained. Let's come over to the charts, talk about what happened yesterday. So it's kind of interesting. Some interesting action before, right? Because we had a pretty big update on Tuesday. But and on the announcement, let's hear, where is the announcement? Oh, we moved down before the announcement. That's right. Dude. So like yesterday, we were looking at the meta order that we saw during our session, kind of saying, okay, does this mean that the Fed meeting is going to be hawkish? Well, they recovered a lot of it before the meeting, but it did end up being hawkish. Jerome Powell not really lending a whole lot of credit to the argument that we should be cutting rates in September. It really sounded to me, am I wrong here, guys? It really sounded to me like, barring a change in the data, Jerome Powell is a no on September. He made because the media was making all of these arguments with him. You know, well, there's this and there's this and this and the economy looks weak and this, and he dismissed all of it. He dismissed all of it. He truly believes, you know, it came back to this thing where it's like, well, is it political, or is there a hidden political bias here against Donald Trump? And that meeting convinced me that it is not about Trump. It is that Jerome Powell believes the traditional economic rhetoric, which is that tariffs should create inflation. And he's sitting here waiting. It's taking longer than expected, but he's waiting here for inflation. That's what's going on. Him and the other kind of more liberal, or let's not even call them liberal, because you know, I think it's kind of more establishment, right? Him and the other establishment people on the board. So anyways, so the market decided that substantially reduces the probability of a September cut, and we sold off yesterday, although recovering a lot of it right now and today, because really what it comes down to is non-farms tomorrow, right? If non-farms tomorrow was weak, well, we'll go and look at those numbers in a second. Okay, so here's the S&P 500. Whew, man, okay, that's interesting. So the S&P 500, just like the Treasuries, sold off hard, and I mean hard. And then it was kind of like, oh, it was just day traders, and they bought it back before the end of the session. There was like a really mad dash to buy at the end. We had Facebook earnings, I think, and Microsoft, I think it was, both really good. So that might also be part of why they had that mad jump up there. A lot of it was after the bell, so. And now in the overnight, a little bit higher, so. All very, very interesting. Okay, oil. Oil is starting to take off a little bit more. So when we were talking over here and we were, it was like, oh, okay, well, we had a little bit of a move up. It's maybe because of rhetoric around Russia. But now Trump is saying like 100% tariff on any country taking oil from Russia. That would mean China. It's really pushing up the price of oil. Okay. The things seems like at first there was kind of like, well, nobody cares. Okay, do your tariffs, but now they're kind of taking this threat a little bit more seriously. Gold and silver, still struggling. Gold. This whole week has just been terrible for gold. Let me tell you. Silver taking a little. Like silver for the longest time was maintaining, right? But now the Fed meeting yesterday hurt silver, and they're hurting this morning as well. Copper. Ooh, mama. Oh man, what happened in copper? Okay, so what happened in copper was they determined that the tariff on metals did not apply to copper. And so the entire move on copper got wiped out. Can you believe that one, man? I have not seen a chart that ugly in a long, long time. That is almost on par with when oil went negative. Brutal. Somebody got royally screwed up there. I don't know. I don't know how much of the Utah economy is dependent upon the copper mine over there. It's a big copper mine, but man, I hope it's not too much because that'll hurt. Okay, Japanese yen. Japanese yen's moving down off of that. They had an interest rate decision overnight as well, and they held rates steady. Japanese yen on the downside, in contrast to the Treasuries, which are kind of on the slightly up overnight, right? So that's interesting. And the dollar has been on a tear this week. A lot of what we've been seeing has been the dollar, and then we get Bitcoin. Talk about a range in Bitcoin. All right. So what do we got? Good morning, Octavius, Ray, A. Paul, Kevin, Amir. Let's see here. 90% of the Fed's economists are Democrats. Yeah, but and that's where it's like, I don't think that it's explicitly a Democrat-Republican thing. I think that traditional economics kind of suggests that tariffs are a really, really bad idea and that they should cause inflation. So it wouldn't surprise me. I think that if you went to school for economics and you came out of school, if we were to poll the graduating class of 2025 or 2024, maybe the ones that just graduated in economics, I think that most of them polled would predict that Trump's tariffs would create inflation. Now, Powell himself in the press conference kind of showed a greater understanding of it than that, right? When you have interest rates in restrictive territory, it's really hard for those companies to pass those prices on to consumers. Companies want to pass it on to consumers. They absolutely do. But it's looking like in many cases they can't. And so we're not really seeing a lot of inflation. Although he did suggest that we are seeing some pass through. So that's kind of interesting. I'm still kind of stuck at, though, that what I'm seeing is I see an economy that is really strong in some sectors, in some ways. And it's strong primarily because of efficiencies and like we really are living in incredible times, guys. Like, AI is making huge changes to businesses, and it's making them extremely more efficient. And the issue that I see is that there are a lot of businesses that are ready to grow big time and make big time money, and they're not because of the interest rates. They're slimming down. They're trying to cut people down. And so instead of us all benefiting from the efficiencies created by AI in the form of a larger economy, it's just kind of all going to the shareholders. I don't like that. But that's what it seems like is going on to me. And when it comes to the interest rate, well, I'm concerned that what's going on is all of the white collar workers are just getting destroyed. It's like we didn't destroy the middle class enough before, so now we have to do the final stab in the back. Right? All the people that were doing well, let's get them laid off and screwed as well. So that when all is said and done, it's just everybody's poor. That's where it's headed right now, man. And eventually, that will result in a recession. So the industries that are relying upon those higher wealth, middle class people to buy, they're going to have to tighten down and lay people off, and it just kind of snowballs. And then, yeah, there you go. Octavius Powell is killing real estate, which is 30% of the economy. Yeah, you're killing real estate. This has a real potential to snowball into a recession. And by the time that Jerome Powell can see it in the data, it will be too late. And this is where I really grates my gears. Mainstream economists, man, because the models that they're using, they're too simplistic. A lot of the things that they believe about the economy, I think have already been shown to be false, or it's more complicated than that, right? And one of the things that irks me, so there's a couple of economists on TikTok that I watch that have really good information. And then whenever it kind of comes up, I'm sitting there like basically waiting for them to talk about a subject where I'm like, but you see, if you were using agent-based modeling, right? And they always dismiss it, even when it's like with inflation, will prices carry through to inflation? Will tariffs carry through to inflation? That is exactly the sort of situation where agent-based modeling can give you huge insight into how that might play out, and they completely dismiss it. It's so, but and I think that where I see that kind of the issue that they come into is they're kind of like, well, agent-based modeling has this limitation and that limitation, and it's true. And so what they're doing is they're saying, here's all the tools in my tool belt, and then there's agent-based modeling, and you know, it has limitations. So they're not that interested in it. What they don't understand is that when it comes to issues of complexity, agent-based modeling is the only tool that really tells you anything. And all of those models and things that they are kind of trying to use to explain those phenomena are useless. And so, yes, you're going to get the economists. It doesn't have to do with them being Republicans or Democrats, but there's going to be a lot of these situations where the Fed's going to get it wrong, or they're going to be late. And we know why, and we know better ways of doing it, and it just doesn't change. Now, I have kind of felt like if we don't get a cut, well, earlier I was saying if we don't get a cut during the summer, or maybe if as late as, I guess originally I was saying maybe it might not be until September, but I still thought, like, I don't think that the economy can handle it. And I think I was wrong on that. Like, the economy has been more resilient to this than I thought. And I think now that the reason why I was wrong about that was because I underestimated the impact of things like AI. Like I think that under normal circumstances, probably we would be in a recession by this point. But there's other things kind of keeping us going. You know? Yeah, Powell didn't help himself with the fact that he cut rates before the election, but won't now. That's a really big red flag. Yeah, well, I think I could game out how he might justify it in his head, though, because at that time, we had a very restrictive stance, right? So I could see you're saying, well, we have a very restrictive stance, so any kind of weakness that we see is a sign that we need to normalize rates. But now that we are only in what he thinks that we're only in a mildly restrictive stance, I think that it's actually still quite restrictive. But he says that it's only mildly restrictive. And so then maybe you can justify that, you know, if we see mild weakness, we can kind of look past that. That's got to be the argument that he's probably making in his head. But I think that one could say, I pretty conclusively, that he has a bias here, but I don't think that it's like he's biased against Trump anymore. I think that it has more to do with his economic view, you know? Now, the one that I really can't square away, though, like I said all that, and this is what I think is going on, but now I'm just going to contradict myself and give you the counter argument to that before Uzi says it, right? Yeah, but 50 basis point cut. It was we did a 50 basis point cut last time, guys. Just ahead of the election. I don't know. That one, I really can't explain that. Every argument that I come up with to explain why we did a 50 basis point cut, because the thing is like, I might be able to say, well, at the time we were thinking this X, Y, and Z and yada yada yada. But what I remember from that was, well, we need to cut interest rates. And then all of a sudden, like a week before the meeting, they were like, yeah, no, we should cut interest rates by 50 basis points. And I remember everybody saying, well, it's because they want to make things look nice for the election. That one doesn't make sense to me at all either. Because if you wanted to cut rate, like the impact of interest rates is lagged. So if you wanted to cut interest rates to help you in the election, you needed to do it in the spring. So that one doesn't make sense either. It's just like, as with everything, is just gray enough for plausible deniability. Well, I don't know. We're into territory now where I don't think that is just like, okay, I have an ulterior motive, like I want to help the Democrats and I want to hurt Donald Trump, and I'm going to do this action and that action, right? But the issue that I see is that the explanations and the data and everything else like that, it's not just that there's plausible deniability. It's that the systems we're talking about are just so complex that you could probably do whatever you want. Like if you were trying to help Democrats and hurt Republicans or something like that, I think that you could probably do just about anything that you wanted within reason and get away with it. Like, I don't think that you have to, like, keep things just gray enough for plausible deniability, because the systems are just so complicated that they provide cover for you anyways. You get what I mean? He was slow to raise during the Biden administration. Okay, now that one was really interesting too, right? Because they were slow to raise during the Biden administration because they were concerned that the Omicron wave of the pandemic would result in another set of closures and another more need for stimulus. And it kind of was interesting the way that switched, because it very quickly turned from, well, I mean, first of all, the Omicron wave didn't happen that way. I mean, that was maybe the bigger thing, was that the fears about the Omicron wave were oversold, right? But that is not when they made the shift. They did not make the shift when it was like, oh, it's not actually going to happen like that. They made the shift when they realized that if there was an Omicron wave, that it would be inflationary rather than deflationary. And it wasn't like there was a data point or something like that changed their mind and said, oh, actually. No, it was just like all of the sudden, all of the Fed governors kind of realized that the issue was the supply chains and all of this, and that it was inflation, and that like further shutdowns would drive more inflation. But now we know well after the fact, and that this was also interesting too. And I remember talking about this, and like we had some studies that were like, okay, what's contributing to inflation? Well, 30% of it was fiscal, 30% of it was monetary, and 30% of it was supply chain concerns. And there's a lot of studies, and they all kind of come down to that same kind of conclusion, that they all contributed similar amounts. But then, well after the fact, like 2, 3, 4 years later or something, because I think that the study I'm thinking of now is 2024, we found out that yes, they did contribute, but at different times. And at the time that we really started to see inflation, the factors like the fiscal stimulus and the supply chain concerns were already past. And the thing that really did create the inflation and make it as bad as it did was the Federal Reserve keeping rates low for so long. So I saw a video on TikTok just before I came in here while I was eating, and I commented on it because this guy was complaining about all of the news media around the Federal Reserve meeting. And he was saying, like, look, people watch news for entertainment, and they've kind of figured out how to hook people in, and so you have to make everything dramatic and fear-mongering and this and that. And his position was essentially, well, there's no big deal. They really shouldn't be cutting interest rates anyways. It'll create inflation. And no, there is a legitimate argument here. There is a legitimate argument here about the Federal Reserve policy. And the issue, as it pertains to Jerome Powell in particular, is that for the past 3 times that there has been, if not 4 times, that there has been a disagreement here, Powell screwed up. In 2017, 2018, they raised rates when the economy was looking weak and then immediately had to backtrack. That was a mistake. That was his first mistake. And that was during the Trump administration. And was it during the Trump administration? Yeah, it was 2017, right? During the Trump administration. So he kind of had to, he screwed up then. And then he screwed up during the pandemic. And now I think he's screwing up now. I tell you what, if we end up having a recession during Donald Trump's term, I think that Powell goes down as the worst Fed president of the modern era, which really pains me to say. because I really like the guy. But I think that he is an economic wonk and isn't really very well equipped to be able to deal with the trading aspect of it. So to me, the trading aspect of it is like what I do affects what other people will do, and how do I modify my actions to do it in a way or to get the best outcome, essentially, right? And traditional economics do not have an answer for that, right? Here in trading, we can go in and we can say, well, if I need to buy, how can I buy it in a way that maximizes or minimizes my impact on the market? And there's all this research about that, and we can do that. And that is trading. That is trading. And predicting what is going to happen, what other people are going to do, right? And the frameworks that we have in economics does not deal with that sort of thing at all. And so we constantly end up in this situation where we're behind the curve, and the Federal Reserve is kind of like avoiding having an impact, but it clearly has an impact, and it just doesn't. Yeah. Now, is it the Federal Reserve that's destroying the middle class? Well, I don't believe that, actually. I think that the Federal Reserve, like the thing that I think is so crazy about the Federal Reserve is that it makes so many absolutely just terrible mistakes. And yet the economy is significantly more stable. And I tell you what, man, the economic history has been way better than when we didn't have a central bank. That's the thing when we get into this argument that I think the people that are anti-Federal Reserve don't consider, is that before the Federal Reserve was made, it was a shit show. Okay? The late 1800s was basically economic crisis after economic crisis after economic crisis. Every 5 years, complete destruction of the economy, like on the level of 2008. Literally every 5 years. Okay, until the central bank came in. The money supply has to be able to adjust with the current conditions, and it's so effective that even if we do a really terrible job at it, it still helps things out. Okay. So the Federal Reserve is trying to do its best based on the current conditions. So does that mean that I think, well, nobody's destroying the middle class and it's just kind of turning out that way? No, I don't agree with that either. Who's destroying the middle class? Congress. Congress is the one that's to blame here. The Federal Reserve is just reacting to the current situation. They can't do anything if Congress overspends, if Congress makes poor laws, if Congress sits by and does nothing while other countries hollow out our economy. Let's see here. They destroyed the value of the dollar since inception. I think that's a good thing. I don't. Let me tell you something, man. This world where the dollar is just as valuable as it was 100 years ago is not this paradise. Okay, it's a real shit show. It really is. We would not be even a fraction as wealthy as we are today. Always kind of, whenever this one comes up, the thing that's always going through my mind And I never really talk about it because, it's just kind of a trivial thing and doesn't matter. But I don't know. I'm feeling like, talking about it today. So we'll talk about it today. Like, when are they going to do a reverse split of the dollar? You know what I mean? Like the dollar has declined in value 10x or whatever. And so we're going to do a reverse 10-to-1 split. So that every dollar is worth $10 or whatever. Can you actually do that? Maybe you can't. Maybe you can't actually affect something like that in currencies. That also gets me thinking on like, maybe we will see additional currencies. I think that might be something that happens, where it's like we want to encourage people to do a certain thing, but you can't really do that without really. Okay, so like as an example, you've heard of this idea where we have a central bank digital currency of some sort, and then to stimulate the economy, the Federal Reserve puts money directly into everybody's wallets, right? You've heard this idea. And this kind of is, I think the reason that people are interested in this idea is because universal basic income, right? Okay. So why is universal basic income a bad idea? Because if you give everybody money, and all that happens is that money just goes into consumption, then you don't accomplish anything. All you do is the people immediately go and spend that money, and then the money just filters over into is just like during the pandemic, we gave people money, and did people use that money to better their lives, or did it actually help anybody in the long run? No, it didn't. They all went and bought TVs at Walmart and made Walmart executives rich. It was another stealth transfer of wealth to the wealthy. And UBI does that as well. UBI basically makes it so that everybody lives in poverty. Like, yes, there's like this minimum level that we all have the UBI so we can pay for shelter and food, but then that's it. And you're poor otherwise. And you have no way to climb up out of that, because you have to do like massive investment and things that at that point you have absolutely no capability of doing. You are at the rich's mercy 100%. Okay. So what do you do in a situation where people can't labor to make money? Like if the value of labor basically goes to nothing, how do people accumulate wealth? And again, the idea is you do UBI. That doesn't work. So one possible solution to this conundrum is, yes, we give everybody money, but we control what they can do with the money. So the way that we deal with this problem in the modern economy, banks print money. First big thing that you got to understand is that the banks, to really understand our system, the banks are the one. Everybody thinks that it's like the Treasury or the Federal Reserve prints some money. No, the banks print the money and then they reconcile it after the fact. And the banks print the money based on making loans to people. They want to go and make a loan to somebody, and they will look at the business plan or whatever that person's income and see that they have the ability to pay that back. And that is how we control what that new money that has been printed goes into. So if we ran into a situation where it really was like nobody can really make any money because labor is worth nothing, one of the things that you could do is you could say, okay, we're going to give everybody, we have this central bank digital currency and we give everybody some money in the wallet, but this currency can't be spent on food, shelter, entertainment, etc., right? It can only be spent on compute, or it can only be spent on business expenses, right? Essentially it becomes a parallel currency, and you can transfer one way. Like if I can use dollars to get this other currency, but I can't use this other currency to get dollars. I can use this other currency to invest, to build things in the cloud, or to start businesses and do things like that. And then that way you can stimulate the economy without it having to worry about it passing through into inflation. I think that there will probably be some problems with doing that, but you're kind of getting closer, like you're actually trying to solve the problems at that point, right? It's closer. It's closer to a workable solution. The Californian lira. It does make you to wonder if we entered into a world where the United States broke up into its, I don't think that, well, it probably would go by states, but it probably should really go by economic area. And what would we call the different currencies? I saw this, man. I wish I could find it. There was this YouTube video where they had a really good breakdown of what the different regions in the U.S. actually are, and I really like that because it really shows how the Intermountain West is its own whole thing, centered around Utah, essentially, and it is very different from California. And is very different from the Midwest, and I don't feel that they really, like, this area is Republican, right? It is not Republican in the way that South Carolina is Republican. South Carolina Republicans kind of irritate me, to be honest with you. That gets me thinking on all sorts of other things. Like, one of the things that really bothers me that I'm seeing now is like people jumping on bandwagons purely because of the people involved, or like the race of the people involved, without really trying to gather any information. Like there was this whole issue that seems to be really blowing up lately, where a couple was beaten at a jazz festival, and everybody's saying, well, like, so first of all, it is attempted murder in some instances, and people should be prosecuted about it. But anywhere that you see the conversation come up, there's no discussion about what led up to that. And people are just jumping on it without knowing the full details about what happened. I don't know. I'm not saying that what happened like justifies it, but it's really curious that people are willing to bandwagon without knowing all the facts about a situation. You know? Which kind of goes into this other thing, which is like woke. Oh my gosh. Yesterday I watched the new South Park episode. I watched the new South Park episode yesterday. And I don't know. It was super, super funny. I did think that it was really, really funny. It was not as good. I think that people oversold it. I actually thought that the funniest part of the episode was Stan's dad talking to ChatGPT. That was hilarious. And I bet you that they actually like literally asked ChatGPT the questions and saw its response. Because he was asking ChatGPT if Jesus was allowed to sit with his kids at lunch. So funny. Oh, I want to see more ChatGPT. I'm sure that there will be like a ChatGPT episode, and it'll be great. But and you know, I'm you can make fun of everybody. they're going to make fun of Trump. Whatever. I kind of think that they got it all wrong, though, because the sorry, what is it? The plot was basically that everybody has abandoned wokeness, and like even PC Principal has abandoned wokeness. So now he's like I forget what PC stands for now, like pro-Christian Principal or something like that. Like he's turned into a super pro-Christian Principal, and that's why Jesus was in the episode and everything, right? And they keep saying like, oh, you know, you should fight for what you believe in, but then Jesus is like, no, because they're gonna sue you, right? That's not what's going on. People have not just shut up because they think PC Principal, because he thinks that, you know, you're just gonna lose and it's just gonna kind of fizzle out and sucks. Or like Jesus, you're being quiet and not arguing against him because you're afraid you're gonna get sued. Like, come on. There's been insane amounts of protest since Donald Trump became president again. Like even worse than his first term. People aren't afraid of speaking out. So what is this whole narrative, media narrative that's like, oh, American Eagle kind of shows that like being white is in and no, that's not what it is either. Let me tell you what it is. What it is that companies have always found that it's useful to advertise in a way that says that if you buy our product, you're going to be rich and good looking and all of these things. And that's the way that they advertise. And during the woke era, they kind of didn't do that as much because it was kind of like bad. It was bad. It was naughty to do that. And now that they've realized that the woke crowd doesn't really have any sway, they're just going back to what they always did. And it's not because they're racist or anything like that. It's because it makes them money. So what's really going on? What's really going on is none of these people were ever on the woke side to begin with. They were only doing it because they thought that it benefited them. And now that they realize that it doesn't, they're abandoning it. That's what's really going on. So I think that South Park kind of missed the plot on that one. Maybe they caught it a little bit because Cartman was acting like it was woke because he thought that it made him morally superior or something like that, but still. You know, every day I come in here, we've talked for 50 minutes now. And then after 50 minutes, then it's like, oh, maybe we should do some programming or something. No, it never turns out that way. It's not going to work that way. My biggest fear is that there's all of these things that I want to do. And there's this impact that we want to have on the world, make things better. And my greatest fear is that my best time, my best opportunities have already passed. I'm 40. Am I having the midlife crisis? Is that what this is? Is this what a midlife crisis is? Because it's just so hard to do all of that with 90 minutes, you know? Well, I don't know. Maybe at the end of October, we'll end up on the job market again. But then we go back to the other problem, which is I have to spend all my time watching kids. Well, it'd probably be better than it was a year ago, because Asher is way better. He's way better than he was. Probably not enough that I could like really focus and program, but he's better. Like I can have other kids watch him and not have to worry about like everything getting destroyed. The kids still suck at watching him, but he just doesn't do as much damage. I'm in my 30s, you're in your 40s. You know, I think one of the things that I can see in myself, and I think it's something that's kind of hard to see in yourself, and I would only see it because I see people talk about it, is that, you know, you push yourself hard, you want to be successful and things like that, and you're always looking to the future, and you don't really look at what you've accomplished, right? You only look at what you haven't accomplished yet. We have 17,000 subscribers on YouTube. That's more than like 95% of YouTubers. We've been really successful with this. It's unfortunate that the way that social media has gone is unless you become super viral, it's not really a very viable living. I really hope that at some point that the economics of this all changes so that you can have mild success as a content creator and live on it. Because right now you can't. It's not until you've become big that you really make money from it. But we've been successful in that respect on the YouTube channel. And on the trading front, well, there's inherent limitations in what you can do with trading. There is, but we've been crazy successful with it in spite of that. I've had periods of profitability that I think most other creators would basically brag about and put the entire rest of their career on, you know. I have this level which is like, I want it to be 5 years. Maybe then I'll brag if I have 5 years, right? Nobody else is going to do that. So we've been successful in trading. I've been very successful with computer science. I'm doing one of the best paid roles. I've gotten really good at it. I'm a really good programmer too. Like I have, and in my 40s, I'm still pretty fit. That's another thing. So like, I actually think that a lot of people, they're watching me on social media. They're not here on the stream watching me foible all over the place, right? So somebody that's just coming across me on TikTok might be a little bit intimidated, right? So just this weird thing where like people, the way they first see you and everything seems perfect, they're kind of like immediately red flags going off like, no, there's something wrong with them. Where's their weakness? Kind of triggers their threat detection. Like, well, this person's too perfect. That's a threat to me. I myself only see I want to do this, this, and this, and I just don't have enough time. But then even if I had enough time, would I really actually be able to do all those things? I don't know. I'm only 40. There's still plenty of time left. But I keep thinking about this because I want more time. I wish it was more like it was a year ago where, you know, we had up till 9 o'clock, a whole nother hour to talk. And I didn't have to drive an hour home, so I had another hour in the evening to do things. And my wife was still around, so I could just focus and do things like, oh man. And you know what? I did take advantage of it back then, because I did things like I got the Series 65 and the Series 3. Those were hard to do. And that took a lot of focus. A lot of focus sessions and studying. It's good. I'm glad I did it. If anything, it showed me, because as a kid, that was a lot of, I could just never, like in my 20s, I could just never focus down. I really wish that I could take the level of focus that I have now and the willingness to take risks and go back and do that in my 20s, you know? I guess the bigger issue in my 20s is I didn't necessarily have the right idea, but, you know, maybe I go back, then I would have, okay, let's move to New York. Okay, let's spend more time doing Series 7, and, you know. But I don't think that I would have come across the knowledge that I've had. So I'm glad that I didn't do that. And now the thing that frustrates me is I feel like I have this great knowledge that I think is incredibly important. Like basically this is the subject that matters the most to mankind's next stage of development. And nobody's paying attention. And I don't know how to get through. Because just telling you all this is like the most important thing doesn't do it. None of you believe me. All of our problems, like the easy problems have been solved. And the problems that are remaining are still problems because they are problems dealing with complexity, and we have not developed sophisticated enough tools to deal with that complexity yet. You can be this hyper intelligent person. You can have artificial super intelligence. It won't solve these problems. It's only going to be when you have this artificial super intelligence and you combine like a million of them together and play out a scenario in a society that you're going to find solutions to these problems. That's how you have to do it. And I don't really see any other viable way. Agent-based modeling. How do you get that across to people? I don't know. Well, you have to, it kind of seems to me in the social media world, you have to make content that the audience is looking for. The audience isn't looking for agent-based modeling. Actually, I'm honestly, I'm not entirely sure what the day trading community on YouTube is looking for anymore. What do you guys think about that? Do you notice where it's kind of like there was this huge, like they just gorged on smart money concepts, and now all of those guys are burning out. I saw the likes there. I appreciate this. They all burned out, and now it's like they don't know what to do. I kind of think that what happens is they all just drop out of the community. They all just stop trading. They like astrology. Man. Yeah, it's kind of hard because when you really think about it, like if you want to have success in day trading, and you understand that you can't really use price as the basis of your strategy because there's too much noise in that. Any edge that's available in that gets wiped out too easily from people trading on it. That doesn't mean that there aren't other things. Order flow helps. And then news in particular is really the big one. And then I guess there's some other things like maybe some options market making strategies and like arbitrage, right? And when you think about all of these different possibilities, they all involve more money. They all involve more money. And that automatically disqualifies like 95% of retail day traders. They have to spend more money on it than they're not interested. I know. Maybe if we pivot to more talking about stocks, I think that the YouTube channel could be more successful. But sometimes I also wonder if I'm just kind of like, well, it doesn't mean that we stop doing the YouTube channel, but I need to stop thinking that my goal should be to make the YouTube channel successful, because I don't know if that's ever going to happen now. Every once in a while, I'll come across jobs where to have that job, I basically wouldn't be able to do this anymore. Would it be worth giving it up? I don't know, man. I don't know if anything would be worth giving up, you guys, to be honest with you. But the channel itself, making content and doing all of that work and not really getting a whole lot of benefit back out of it, I guess I could give that out. Yeah. You should stop paying for data, close up your trading account. Well, but I'm not losing anything, Uzi. I'm not losing anything. I'm not. It's actually like overall, the overall venture is I would consider it a profitable venture. And it's been really beneficial to me personally, right? Like we've learned so much from doing this. That's invaluable. That's invaluable, right? So we're not losing anything. But what it is, I guess what we are losing is spending a lot of time and energy on something that ultimately doesn't make you a ton of money, right? So I don't think that the trading always offsets, well, especially the last year it hasn't. But before we got laid off, I was paying for the cost of trading about 50% of the time. Actually was actually really good often. But then when you add like the residuals from YouTube advertising, it pays for all of those things. In fact, I pay for things that like I'm not sure if I really need, but I'm keeping them going anyways. So the biggest one is the mailing list. So if you go to speculatorseth.com/strategy.html, you sign up for the mailing list and it will email you a PDF that I spent a lot of time writing and is really good, and I should turn into a book, kind of going into more detail about how I've developed my strategy and how you can kind of develop your own on the same template. And that is not cheap to keep that mailing list going, actually. and so the YouTube channel as a whole is self-sustaining. I could do it forever without ever having to put money into it. No, I don't. I'm never going to sell the mailing list. But what I should be doing is I should be going, hey, I made an update to the indicators, or I have this thing or that thing, and sending you emails with it. And I don't. I think what I really want is I have these goals. Okay. Like I want to be the best trader. I want to make more money from markets. I want to develop a trading platform, and I want people to understand complexity and the markets are inefficient so that we can make better decisions in the future. So I'm kind of concerned some of the decisions that we're going towards kind of takes us on a negative path. Okay. And then I guess you know, another short-term goal that I have to put in there is like paying for college for my kids. Right? It's kind of a more personal one, right? And I think what I really want is all of these things are either so long-term that you don't really get daily feedback about it, or are so much of a pipe dream that I've already kind of realized that it's probably not going to happen, even though I'm going to continue to put the effort into it as long as I can, right? And I guess what I really want is I want small wins to keep me going, you know? But not to keep me going like financially, but small wins that can give me that boost to keep you motivated. Because it's kind of a little grating to sit back and think, well, I've been doing some of these things for like I've been grinding for decades. And has it really put me that far ahead? I don't know. You know? I just want to, you know, like I miss the days when you could go and play an online game and win the online game and feel good about that. And now you can't even do that. It's just like, because all the games suck. And they're all designed to not ever let you like feel good about winning. It's like, You started this whole thing asking if it was for... No, I'm not sure I'm following. I do think that I don't know. When I think about am I risk adverse or not, I have mixed thoughts on that. Because I feel like that in many respects I am risk adverse, but I also think that I take really big risks compared to most other people. It's like I take big risks compared to other people, but I don't do degenerate gambling. I guess the problem is that I want to take big risks, but I don't feel like I've ever come across good probability setups to really feel like I should really take that kind of a risk. You know, like the kind of... Okay, so like, okay. Good example was that thing we were talking about yesterday, where this lady says that her husband has been day trading for the past 6 months and lost 50%. And how long do you think it would take to be successful with it? And he was doing this because he was laid off from his finance job. So you've been laid off. So I'm going to take my big wad and I'm just going to become successful day trading from it. That's a huge risk. And that's kind of like a life-altering risk, you know? And I, of course, would never take that risk because I know that it's a dumb risk to take. I know that, like, even if you're successful with it, it's not really going to pay you. He's trying to do something that's ultimately not really going to work. I don't know. Some people do have success with it, but I really think that people overplay what actually happens if you're successful at it. Okay. But I would like to take risks like that. You know, like if I had an opportunity to take a risk like that, but in building our own trading platform, I would take it in a heartbeat.
Order canceled.
I really am having a hard time coming up with a way to make that one practical, you know? I would really like to do that. Can order flow be used in low liquidity and high volatility markets such as stock markets? Well, first of all, I wouldn't consider stocks low liquidity, high volatility. There are thick tick and thin tick stocks. My opinion, and I don't really have any data to back this up, but my opinion is that order flow works better on thick tick instruments. That's why I trade ZN, because it's the thickest of them all. And futures, yeah, all futures are tend to be a bit thicker than stocks. Stocks, you've got a spread, but there are some instruments. I don't know. The big one used to be Intel. I don't know what has replaced Intel, but there are some thick tick instruments over there that you can take advantage of. The reason that you do better in a thick tick instrument is that the more liquidity there is available, the more that large institutions are going to use that instrument. They have the liquidity to act, and they have the liquidity to act on a regular basis, right? And so that provides you flows that you can predict and trade off of. That gives you predictive signals. So there tends to be more predictive signals in those thick tick instruments. But watching the order flow and understanding what's going on is going to help you no matter what kind of an instrument it is, right? Just realize if you're trading something that's really slippery, like NQ, for instance, that you're going to have to rely a lot more on your informational advantages. Right? This is why I'm really not, I always kind of play coy with it. I should be more direct. I think it's stupid to trade NQ, to be honest with you. Because with NQ, because of the hedging flows and all of that, it's really difficult to get a solid informational edge in the equity indexes. And NQ is so illiquid and fast moving that it just destroys you. And so I honestly believe that most retail traders have no business trading NQ. And I really only think that the situations where it's appropriate to trade equity indexes is like swings on really big matters. Like trying to catch the bottom during the whole tariff thing. That's maybe a place where it might make sense to do equity indexes. There's certain narrative changes or events that happen that you can kind of use to get the position started, and then you hold it, right? And that's an informational edge. You're trading based on, a change in the economy or something, like a really big macro change. And then it makes sense to trade equity indexes. Otherwise, I kind of think that it's a crapshoot. So I'm going back with Uzi. I thought maybe if I came back to it that I would understand what he was getting at. You started this whole thing asking if this was for you. No, I wasn't asking if this was for me. I'm asking how much am I willing to give up to keep doing it? How practical is it? So let's say, for instance, and part of I guess I should be more out. The reason I'm thinking about this, not that there's like any direct like case of this or anything, but like one of the things that I have that's unique is I have a very strong understanding of both the technology and when I say the technology, I mean on the programming side and the infrastructure side, and I understand finance and trading, and that's a pretty rare combo. And I think that there are certain narrow applications of that where I don't think that there's anybody in the world that is as well versed on that as I am. There's certainly, listen, there's quants over at that they know tech and they know algorithms and stuff like that I don't know. Okay, so there's that, but they're not going to know the infrastructure, right? Things like that. So I think I have a unique skill set, but in order to take advantage of that skill set, I have to go and work for a bank where basically I'm not allowed to talk about markets, I'm not allowed to trade. Right? So the question is, how much would they have to pay me for it to be worth it? Because if Facebook came to me tomorrow and was like, well, we're going to pay you $100 million like we're paying these other guys, right? But you can't comment on markets anymore. Well, I would have to take that one. I would have to take that one, right? So where's the line? Or is it? But then there's a part of me that says that there is no line, that there should be no situation, no amount of money they could give me that would make me want to give this up, to give up in particular helping people understand how the markets work, why markets are inefficient, and the nature of complexity. Because I really think that is like the most valuable subject for our society to understand for the next stage of human history. And if somehow I end up being uniquely placed with the YouTube channel to be the person to talk about that, even though nobody cares and listens, I'm the only one trying, right? And if I were to stop doing that, I would feel like you're not being true to yourself or something, right? I would feel like you have a purpose in this life and you're not following it because it was too inconvenient or something. You got tired of it, you know? And so I want to keep doing it. So now I'm kind of, now I'm trying to negotiate it. Now I'm saying, okay, well, we're going to keep doing it, but what can we do to make it easier? What can we do to get those small wins to keep you going? What can we, or more to the point, what could we do to, what could we do to make more from it, to make it easier to make more content, to give us more resources to make more content and to reach more people, or a strategy that would just reach more people, you know? And the answer lately has been, well, we should spend more time writing algorithms, right? And what do I actually do? So what I actually do is I come in and we talk about the market and certain cultural issues for about an hour. And then I spend 30 minutes talking to myself, like, well, but this isn't really going anywhere. So I feel like that there's still some possible strategy switch that I'm missing. And yes, the strategy switch is, you know, like I'm digging so hard to try and figure out where it is that I am even thinking about, well, like, yeah, we could just close up shop. But then if we close up shop, we're not actually doing anything. Was it really Chicago PMI today? How come? Oh, you know what? I don't think that yeah, you're right. 47.1 versus 42. Well, that's interesting because the market did not move on that at all. I want to go deeper into balance of a VP of that otherwise. Okay. Be honest with you, I don't believe in any of that stuff. Would say at the moment the S&P 500 is looking like it's doing an okay bounce, but I don't know if that's going to continue or not. What was that? I mean, that must be something in Discord, but I'm just not seeing where it's coming from. No, my feed just died. Oh, Amir says your data freeze. Am I still live? Is it an overall problem with my connection, or was it just rhythmic? Well, I can visit Google. Rhythmic itself seems to say that it's still connected. What about Ninja Traders? And it was just Jigsaw for some reason. That's weird. Okay, well, we're back. I was also hearing like a lot of Discord messages though, so you know, so you know, here's another thing. Here's probably an even better thing to think about is that like I feel like here on the channel as of late, especially, that I think far too much about what would be like the best thing for me. Like I want to get small wins, etc., etc., etc. When really I should be spending more time trying to figure out what you guys would like the most, you know? And then that's kind of a hard thing to sort out too, because you know, it's a small deep group, it's a small close group, and you all have different interests. We're not entirely sure what would help us the most or what we would enjoy the most, you know? I don't think that it's just spending the whole stream programming. Y'all go quiet when we just program. So I don't know what to do with that. But I just can't shake this feeling that there's something I could be doing and I'm just not realizing what it is, you know? So, by the way, this one was kind of an interesting one today. I need to look at I feel like I need to spend more time looking at my market imbalance, because it seems to me that there is a tendency for the market order imbalance to be positive. Like it's almost always above 50. And yet I will see net decline in cumulative delta. Right? Like how does that work? Cumulative delta's down, but we've been well above 50 the whole time? How does that work? Is there am I screwing something up? I just can't. Is there some residual volume that gets carried over or something and it keeps it by? Like, I don't understand how. I don't know. It's super weird. I wonder if I come in and I look at not the strategy analyzer, trade performance. I don't think this is going to be very clear. Oh, man. Well, 41.6, I was going to say. Some, like, recently it's been doing really terrible, right? But I think I might be able to go all the way back to the beginning of the year. Okay, wow, it's taken 315. Okay. But yeah, see, look, it's taken twice as many long trades as short trades. That, well, I guess the percent profitable is better on the long trades, but I wonder, am I... Oh, that's weird. Oh, yeah, the winning trade is... Huh. Oh, now that's interesting. The long trade, the loser on a long trade is... Average loser is negative 26. Basically, it's taking the full stop. Actually, it shouldn't be 26. I don't know how it's 26, but... And the average on the short trade is 13. So why am I losing so much more when I do a long trade? That's kind of weird. But then the ratio here, like my winners are not very large compared to my losers. And I still have terrible win rate. That kind of suggests to me now, I think there's some issues because, yeah, okay. But that's not right either. Because we were using it like at the beginning of the year and it did really well. I think that some of that time period got lost. And we did well when it was like about switch too. But I don't think that flipping it around would work. You think that the options are messing with the cumulative delta? That might be true as well. Oh, there was one that was like a really bad. That should not have happened. So that's a data point that probably we have to take out. A lot of them have a lot of adverse excursion though. That's really curious. When can I find that data point? I go to trades.
Order submitted.
Now it's taking another one. This one was on the 1st. Oh, that's interesting. So let's just change this to be February. Okay. Does that yeah, that fixes it. Okay. So what this is showing me here is that if I set it to be take a 1-tick profit, almost every trade would have been profitable. That's actually alarming to me. What would that be? Let's say 2 ticks. 312 times 0.9 times 2 times 31.25. 17,000. You might have to hit higher than 90% though. That's kind of curious. So part of what I'm doing with this strategy is I want it There's definitely some things that are wrong. Like the average time in the market should be closer to 60 minutes, but apparently it's getting stopped out sooner than that sometimes. I just want to say, like, if I expose myself, something that I would like to have is like, you see these MFEs? I would like to see, like, okay, every time that it's made plus 1 tick, how long does that take on average? And every time that I've made plus 2 ticks, how long does that take on average? So that I can kind of see, you know, because I want to see, okay, I'm exposing myself for an hour, but is it like this signal is only good for 5 minutes or whatever the deal is? And like, when should I cut it off? Essentially. And I feel like that there might be a way to do that within the data, although I would have to keep track of like at each point where I made. But so I don't expect this to be profitable, right? But the reason we brought it up is because the cumulative delta always, or sorry, the market order imbalance always seems to be long, even though the cumulative delta is negative, and I don't understand how that's possible. So yeah, I don't know. I might go into that and look and see if there's something. It makes me feel like there's something off. When I feel like I have a good knack for like understanding when we're doing something wrong and you know, we need to go dig deeper, but I can't explain that. It's so weird. Even if there was some residual volume being held, why would it always be in favor of buying? That doesn't make sense. Unless it is just like a manipulation. To go to ZN. Well, I don't know. The other thing is that why is it persistently buy when I wouldn't say that the market has been persistently buy during this period. It's kind of been mean reverting. So I don't know. Well, anyways, I'm well past my time. So that was the wrong screen. I'm gonna get going, guys. So I will see you tomorrow in the meantime. Oh, don't miss tomorrow. Tomorrow's gonna be big. So